Have you looked at your paycheck recently and felt a fleeting sense of victory? Maybe you got a raise, or maybe you just noticed that for the first time in a long while, your income seemed to finally be outpacing the cost of living. For a significant period, we were living in a rare window of economic grace where average wage growth was actually beating the rising prices around us. It felt like we were finally getting ahead. But what if I told you that this was nothing more than a trap? An illusion designed to keep you comfortable while an invisible thief was already halfway out the door with your financial future. Right now, a massive shockwave is ripping through the global economy, and it is about to wipe out every single cent of those hard-earned pay gains in one devastating blow. You are not going to hear this on the mainstream evening news until it is too late. But the reality is that inflation is violently roaring back, fueled by geopolitical conflicts and a sudden energy crisis that no one was fully prepared for. Do not panic, though. Stick with me through the second half of this video, and I promise to give you the exact step-by-step strategies you need to bulletproof your portfolio and actually build wealth while the rest of the world is scrambling to pay for groceries. To understand why your wallet is about to take a massive hit, we have to look past the surface-level numbers and understand the domino effect of global macroeconomics. Most people fall into the trap of thinking locally. They see a small raise at work and calculate that they are now 3 or 4% richer. They do not realize that their local paycheck is entirely at the mercy of events happening thousands of miles away across oceans and heavily guarded straits. Recently, severe geopolitical conflicts have erupted, choking off critical supply routes and sending absolute shockwaves through global energy markets. This is not just a political issue. It is a mathematical certainty that when the cost of energy spikes, the cost of human survival spikes right along with it. Let us break down this domino effect so you can see exactly how a headline about a conflict across the globe reaches into your bank account. The first domino to fall is always crude oil. When uncertainty hits oil-rich regions or critical shipping lanes, the market panics and oil prices skyrocket. The second domino falls almost instantly at your local gas station. You pull up to the pump, and suddenly it costs you 20 or 30% more just to commute to the job that gave you that tiny raise. The pain is immediate, but this is just the beginning. The real devastation happens when the third domino falls 3 to 6 months down the line. You see, an energy shock does not just make gasoline expensive, it makes everything expensive. Think about the bread on your table or the fresh fruit in your fridge. How did it get there? It did not magically appear. It was grown using fertilizers, which are heavily dependent on fossil fuels to produce. Recently, the flow of critical materials like fertilizers, aluminum, and helium has been severely interrupted. When fertilizer prices surge, the farmer has to spend more to grow the exact same crop. But the farmer is also facing labor shortages, perhaps due to shifting immigration patterns or a tight labor market, adding even more pressure to their bottom line. Then, that expensive crop has to be loaded onto a truck. That truck runs on diesel, which has also spiked in price. The trucking company cannot simply absorb those losses, so they pass the cost on to the grocery store in the form of massive transportation surcharges. Finally, the grocery store, facing higher overhead costs to keep the lights on and the refrigerators running, passes the entire compounded bill directly to you. Suddenly, you are paying $10 for a loaf of bread and a carton of eggs, and that 3% raise you got at work feels like an absolute joke. This is the hidden inflation trap. It is the insidious way that prolonged supply chain disruptions and energy shocks permeate through a host of commonly purchased goods and services. Airfares jump because jet fuel is more expensive. Shipping companies slap on fuel surcharges that make every single item you buy online cost just a little bit more. And while there might be a silver lining somewhere, like a slight cool down in housing rents, it is completely overshadowed by the massive, unavoidable daily costs of food and transportation. The terrifying part is that this is an abrupt increase with lasting impacts. Some economists try to soothe the public by saying inflation was already building and this is just a temporary spike. But history tells us a different story. Energy price shocks have long legs. They bake themselves into the core of the economy, changing consumer psychology and corporate pricing models for years to come. So, how do you protect yourself from this massive wealth transfer? How do you survive and thrive when inflation threatens to eat your paycheck alive? Here are 2 highly actionable steps you must take immediately. First, you need to own assets that actually benefit from inflation rather than being destroyed by it. Cash in a savings account is guaranteed to lose purchasing power. Instead, look into allocating a portion of your portfolio towards commodities, energy sector index funds, or companies that have dominant pricing power. These are the businesses that provide essential goods and can easily raise their prices to match inflation without losing customers. When the cost of everything goes up, you want to be the one owning the things that are going up in value. Second, you must aggressively restructure your debt right now. Inflation is a killer for your daily budget, but it can actually be your friend if you hold long-term, fixed-rate debt like a low-interest mortgage because you are paying the bank back with money that is worth less over time. However, high-interest variable debt, like credit cards, will destroy you as central banks keep interest rates elevated to fight this new wave of inflation. Pay off that variable debt immediately and build a robust emergency fund in a high-yield account to cushion the inevitable blow of rising daily expenses. You have to stop thinking like a consumer and start thinking like an investor. The global economy is shifting, and the days of easy money and cheap goods are fundamentally over. You cannot control what happens across the world, but you can absolutely control where your money is positioned when the shockwaves hit. I want to hear from you now. What is the most shocking price increase you have noticed at your local grocery store or gas station this week? Drop your experiences in the comments below so we can see how this is affecting different areas. And if you found this deep dive valuable and want to stay ahead of the curve on macroeconomics and personal finance, make sure to hit that subscribe button and turn on notifications. Your financial future depends on staying informed.